Hello and welcome to another episode of Technology Heroes Unplugged from Capital Club Dubai, where today we'll be discussing the rise of digital payments in an increasingly contactless world. With globally digital payments adoption increasing, it is my pleasure to introduce today our guests who are all technology heroes in the payments domain. They are Haytham Maayergi, a seasoned executive vice president for ADIB, focused on transaction banking and the next generation of the e-dirham rollout in conjunction with the UAE Ministry of Finance. Soliman, the managing director of Network International, driving Middle East Africa-wide payment partnerships such as the recent Alipay partnership, all of which drive greater digital commerce. Arjun Singh, the executive vice president for cards and payments at Futtaim, who is busy reinventing supply chains with new payment technologies and also makes time for contributing to the open banking dialogue in the UAE. And last but not least, Javed, the DXC Managing Director for Payments MENA, currently working on the e-dirham rollout for the UAE with the Ministry of Finance. Welcome to all of you. So, it's been a story of three continents so far: China, India and Africa, where all eyes are currently on the much anticipated IPO of Ant Group next year, scheduled to be almost worth over $200 billion. And I guess the lesson that many financial leaders will be asking to understand is really, how did Ant Group manage to land with Alipay almost 1.3 billion financially inclusive customers in China? If we then turn to India, the story is equally impressive, where you've got the UPI electronic payment system, which has become the financial backbone of the country in the last 2 years since its launch, where all the citizens of India, almost 1.2 billion of them, shared their biometric details with the UPI scheme itself and agreed for the Reserve Bank of India to now manage all of them within that payment ecosystem where they were regulated as known customers. What experiences could you share as your interface with the UAE economy for how we've adopted and been able to bounce back in these COVID times?
Okay, actually this was a very interesting year to observe. In the past 20 years, when we were trying all our efforts to put adoption into online channels across retail or even corporate specifically, it was always an uphill struggle. And this year, the amount of adoption we have seen is amazing. Is like, we're not talking about percentage increase, we're talking about multiples of increase across number of customers using it or payments that are going through. And I think it was the perfect storm, because on one hand, shops are closed, there's only way is to go e-commerce. A lot of people who never did e-commerce are doing it. You have on the other side, government are going online. During this lockdown, we were facilitating government payment online, and I was wondering how would these people get these services if there were no payment online at this time. Branches on the other side cannot give the same service for them. It was the perfect storm for everybody. In the SME side and the corporate side, we've seen a lot of people, especially the older bracket of age, who used to love their envelope pen and they want to sign every check. All of them now, they start to say, we have no choice, we can go to the branch, we'll go into adoption of the online banking, and suddenly discover that they in love with it, because this addiction to paper and pen was being removed slowly. So I think it's an interesting phenomenon that we see now. And the good thing is, my expectation now that we will, at one point when we go out of this, I don't think there's a lot of coming back to the old school. There might be a percentage of people might look at it and feel, I miss the old school. But I think most of us will look at it as a point where we exploited our speed of 5 years or something. So big change for us, big change we've seen across the country, big change of people we didn't expect to adopt, to have adopted. And it was quite interesting to observe.
Let me put that question also to Arjun. Arjun, at Futtaim, you're at the forefront of driving retail habits for all of us by the adoption of new technologies in payments itself. What are your observations on how you've seen the market respond in the current times that we live in?
The first thing which we actually saw, and I see this both from our card programs, because we have issuing programs, and the acceptance. There's a growth in what we call sort of mindful shopping, right? Which basically means people are spending more money on essentials. We actually saw a 12 percentile point shift during this period of COVID in terms of how people were spending. People are using debit cards more than credit cards, so people don't want to build up balances and have huge obligations. We've seen a growth on installment financing, whether it's traditional EPP on credit cards or the emergence of BNPL. But two other interesting categories which I would want to stress in this is, one is it's not just about the value, but availability, convenience, and speed is becoming increasingly important. And one of the things last 6 months has shown us from data is that people are more willing to shift brands if they don't get those three, right? So yes, value is still the king, but there are sort of other checkers on the table, right? The third is, I think we've talked about omni-channel for a decade. I think the time for omni-channel is now. And if the brands don't deliver omni-channel and the experience of omni-channel, I think they'll miss out, right? And I think the trend which will catch on in this part of the world because of the way we are set up and the importance of malls is buying online and procuring in store or curbside, right? Final point, and I think you alluded to it, is very interesting. So I call it a lot of news. So we have seen entirely new segments come online. So whether it was the slightly older generation or the technophobes, they were left with no options. They've come on board, and they're going to stick on board. Now that creates all kinds of new challenges and opportunities, right? Because most people have designed their online products for the young, the savvy, the people who like to, run their fingers over their phones. Not everybody is going to be like that, so I think that's one. Secondly, the width of what's available online has widened. Lots has been written about groceries. I think everybody hears about groceries online, but it's not just groceries. We run a very large automotive business. I actually have people who have bought cars outright online, okay? Full outright car purchases online. And we're seeing increasing amount of money on down payments, servicing of cars, telehealth, another thing, healthcare, people paying. So I think the SKUs, as I call it, online is actually growing, and I'm sure it's very exciting for people like Samer and others who sort of power a lot of that. And the final thing I'll sort of make the point, and sort of the fifth category is we saw a couple of interesting payment shifts. So one is COD, right? So everybody in this part of the world has had this sort of bane in the world, cash on delivery. And I, for one, and I was obviously the smaller camp, always believed that it was never the love of cash. It was the fact that people just didn't trust putting their cards online. Others wanted to actually feel the item before they paid it. They switched over to payment on delivery, i.e. using the cards pretty seamlessly. And then the fact that both merchants and customers have taken on new formats of payments, which is very interesting. So I'll give you an example. We introduced something called Request to Pay. We had to do it for one of our brands who was not online. And we actually saw something like 35% of the turnover of that business go on to Request to Pay, right? So I think we're in this world where things are going to continue to change. I think there will be some level of normalization. I don't think we're going to stay on the same trajectory, but I think generally we're moving towards a world of more digital.
So there's very few who can honestly say that they've been able to work with people buying cars outright online. Samer, if I can turn to you with the same question. Given your focus on driving digital commerce in the region, how have you seen consumer habits evolve in the current times that we live in?
Absolutely, and I think to take a step back, first of all, how we used to serve our customers changed. So previously we used to be all under one roof, now we are all working remotely. And this is a very cultural change on how we operate. We have got two customer segments that we do serve, retailers, businesses, and we've got banks and financial institutions that we do serve across the Middle East and Africa. In the retailer side, back to what Haytham mentioned and Arjun have mentioned, significant shift from brick and mortar to digital. Remember, a lot of the SMEs had no access to digital platforms when COVID hit them, and they were living on their business. So they could not do business, they're done. What we did is that we introduced a capability called Pay by Link to help them. You don't need to have a website, you don't need to do anything. You just ship your products, link comes to the customer and payment happens. So businesses started to deliver more value, to be more nimble, to address the needs of the market at that point of time. Another shift that I've seen, so e-commerce is a boom. Back to Arjun's point, but I can back it up with numbers. Jan to this month, 50% of volume growth on the e-commerce space. So that's a significant shift when we talk about billions. The second area that is obvious and have seen a significant adoption are the contactless payments. In Jan, 24% of the payments in the UAE were happening on contactless. In August, it was 50% of all payments are happening in contactless. Back to Arjun's point, high value ticket size have been reduced, so non-essential buying have reduced significantly. But at the end state, I think, and the most critical point is that the whole ecosystem have evolved. Supply chain has been disrupted as well as one of the key areas, because you can really buy online, but it will not be fulfilled. Like if you order from one of the large supermarkets here during the lockdown, delivery would happen 2 days later or 3 days later, because the ability to deliver has been a significant challenge. But one main area that everyone now is focusing on is how to bring about more convenience to the customers. So for example, you would have read in the news that we are taking Dubai Dragon Mart online, for example. You know how difficult was an experience of a customer to walk into Dragon Mart and do his own shopping? It's cumbersome process. We have just signed up to take them online and move the whole experience online. And this is not because of COVID, this is because of the customer experience, but you could not have talked to the Dragon Mart tenants and talk to them even about payments of cards 6 months ago. Today they are ready to go online because they want to do business. So a significant change in the attitude from a retailer, from a consumer side. From the issuer side as well, there is another shift which Haytham has highlighted, but when you focus into payments in specific, digital payments and digital virtual cards became a necessity, not fancy to have, because that was the case early this year. So significant change, back to your point, Naveed, and to back Haytham and Arjun's points.
Arjun, I'm going to turn to you for the second question, which is about contactless, which Simon mentioned earlier. If we look at just a very simple example of the London Underground, a town that some of us know quite well. When the London Underground switched to contactless payments, last year, backing up Simon's reflections on how contactless has grown, they saw 50 to 5% of transactions shift to contactless. Different wallets, Apple, Google, Samsung, were all involved in the background as a piece of that equation. My question to you on contactless is, what's driving our region's growth of contactless, and where do you see this evolving?
I personally feel contactless is a mega trend, right? And I think we shouldn't look at contactless as just the ability to tap your card on the machine and make a payment, right? That's kind of just the start of the journey for me. We've seen 100% growth in contactless, right? The reason why I think it's done better in maybe this part of the world versus some of the others, I think a number of large retailers, and we do have concentration of retail in a few hands, I think went contactless a long time ago. We went contactless, I forget, 2.5 years ago, and it was like a no regret action. We said, we're going contactless, customers will come on board whenever they come on board, but we should go contactless. So nobody saw a pandemic coming or any of that stuff. So I think, and a number of other merchants were well advised by the likes of NI and their peer group to go down. So I think there was an element that the acceptance environment allowed us to do. We're also heavily mobiled here. Everybody carries an Apple phone and a Samsung phone. And I think Apple did a fairly decent job in terms of encouraging people onto Apple Pay. And then I think as issuing banks went on contactless, they all tried to get top of wallet on these Apple Pays, so they did the advertisement. And we are a concentrated market, right? So at the end of the day, net addressable market of 4 million people maybe. So I think the word is easy to get around. But then you sort of say, okay, so what's the next big thing? And for me, the next big thing then is biometrics, right? So what we call invisible payments, or pay by voice, or pay by sound. And I think here, I think the banks and the regulators have a bigger role to play. Because I think if you cannot get the customer to trust, feel safe, and answer the privacy question, I think people are going to be incredibly uncomfortable giving their photographs, right? And so on and so forth. But now there's amazing technology out there which doesn't require you to do that too, right? I was talking to one of the startups who we are trying to do a POC with, right? Who does not tokenize your facial print on the cloud. So I think contactless has set the scene for us, right? You can take this as far as you want. I think we are a very homogeneous, small community here. I think it should flourish, right? That's kind of where I see it going.
Okay, well, I mean, you've touched upon the wallets already in your answer. So contactless is growing. Wallets are becoming more relevant. Javed, if we look at the main wallet players in the market, Samsung and Google each have almost 10 million active users on their wallet today. And then you've got Apple, who've created a really great network around their wallet, where they've got 20 million. And it's the same for Starbucks, where they've created a habit for many of us, where they've got almost 25 million on their wallet today. And it's to do with the network effect as well. The question to you would be really for many of us who still want to understand what is a wallet. What is a wallet? And why is it relevant for us?
Quite simply, a wallet, in this case, a digital wallet, is just a digital version of your credit or debit card in an app in your phone. You don't have to have a card. You can, depending on the wallet, you can link to your account as well. In some cases, you don't need to link account or a card as well. You can actually go and top up in cash as well. The main technology used in digital wallets is there's two dominant ones. There's NFC, and that's prevalent more in the US, if you like. And then you have QR code based, which is very popular in China. So you can see there's an east-west kind of, China versus US divide in that. There's about 170 or so digital wallets globally. New ones coming all the time. You mentioned some of them. In the UAE, for example, there's a Clip.
The cash platform.
Exactly.
Cash platform.
Exactly. Yeah, that's available. The reason it's dominating the payment industry is because of ease of use and convenience. As simple as that. A lot of the wallets are very, very functionally rich. If you think about comparing with card, and I know people talk about cash to wallet, I see that more as a transition from card to wallet, and it does make a difference when you do the comparison. And from cash, you go to card, and from card, you transition into kind of wallet, and you kind of have to make that shift. And if you think about, you have a card and you want to have various, you want to know what offers your bank is giving. You have to go to their website and say, what's the recent offers? In a wallet, you get that instantly. You can share your bill with your friends. You can look your history. You can sometimes disable the card, enable the card. In real time, you're seeing all the transactions you've done. You can look at your spending pattern. So all of that really is adding to the convenience factor and the growth of digital wallets. And despite the fact that I don't have one, I can see Haytham's horrified. The core thing around digital wallet is that it gives you control of your finances, and who doesn't want that, right? So as a result, people feel empowered, with a digital wallet, and the transition that I see is right now digital wallet is seen as an alternative way of payment, but I think it's gradually moving into the new norm, and it's here to stay.
So just again, staying on wallets and schemes, okay. If we just look around the region today, you're playing a key role in the UAE today in driving the next generation adoption of the EDIRM program rollout with the Ministry of Finance. But if we look around us today, and I'm going to go back to my favorite example from India, where the Indian payment system is based, it's a scheme, is based on the Aadhaar card, in which about 1.2 billion Indians agreed to share their iris scans and fingerprints to create this really cool platform that basically allows you to now be a known customer, which is one of the major regulatory hurdles that they can overcome in an instant. In fact, during the crisis, UPI as a system in India was used by the government to make emergency loan payments to various merchants across the country. In fact, they're even talking about how vouchers could be issued for future consumption of new offers from the government as a stimulus for the economy in India as well. What is a scheme, in your opinion, and what are the adoption methods or steps, and what lessons could we possibly learn? And I'll probably come to you, Haytham, on this one as well.
Quite simply, a scheme is a set of rules, if you like, that the participants have to abide by. The best way I can explain is if I give an example. Imagine Arjun goes into a supermarket and does a transaction using an ADIB Visa card. Behind the scene, there's a number of parties involved. ADIB is the issuer because they're issued the card that Arjun is using. On the other side, the POS machine uses the card. The POS machine is actually being rolled out by an acquirer. Imagine in this case, it's Network International. And the reason the whole thing works is because they're all part of the Visa network, and Visa is a scheme. And usually in the merchant in the supermarket, if Arjun used 100 dirhams, the merchant will get back maybe 97, 98 dirhams, and the difference will be split between the participants. So the Visa will take a percentage of it, the issuer will take a percentage of it, and the acquirer will take a percentage of it. Typically, the issuer takes a larger percentage, but then there's a lot of issuers in the market. There's less number of acquirers in the market. That kind of balances out, right? So when you're talking about a scheme, therefore, the first thing is with a new scheme, you need to make sure that you have a viable commercial model that gives a good value proposition to all the participants. That's the customer, to the merchant, to the issuer, the acquirer, and the scheme. It also helps if you have a strong backer for the scheme. And this is why the national schemes come in. Because often in a national scheme, you have either the government backing the scheme, or you have the central bank backing the scheme, or you have Ministry of Finance or the like, backing the scheme. And also with a national scheme, you can have a different priority. The commercials don't always have to matter. So for example, a country can take a view that the payment infrastructure is too important thing for the country to have a scheme on its own and not rely on foreign parties in the country. So as a result, the considerations are different as well, right? If you look at some of the schemes that we have in the region, if I start with MADA in Saudi Arabia, that started around 1990 or thereabouts. It came into the time, it was the debit card scheme in Saudi when Visa and MasterCard didn't have an equivalent product. When we look at RuPay, you mentioned in India, that came in as a low-cost alternative to foreign schemes that were considered too expensive, and to provide an alternative for the hugely unbanked population in India. Then you have other instances. If you look at Mir in Russia, that came a bit later. That came in the context of the sanctions, where Visa and MasterCard would not provide service in the country, so they had to come up with their own scheme as well. And of course, my favorite, the last one, eDirham. The latest generation of that just went live just over a week ago. It's for the collection of government fees in the UAE, where the scheme moved from what we call a CISA model, which was a single issuer, single acquire model, where all the cards in the market was issued by First Abu Dhabi Bank, and First Abu Dhabi Bank acquired all the government entities, to a MENA model, which is a multi-issuer, multi-acquirer, which is, it's opening up the market into multiple banks on the issuer side as well as multiple banks on the acquirer side. In fact, ADIB was one of the banks that went live in the latest go live. So if I want to summarize in terms of for a scheme to succeed, you need, first of all, you need to have the value proposition in terms of the right commercial model that's attractive to all the parties. It helps if you have a good, strong backer for the scheme. And finally, with the examples I gave, you have to be clear in terms of the purpose for the scheme, what it is you're trying to address, who are you trying to address, and what problem are you trying to solve. So if in my perspective, if you get these three right, you've got a good recipe for success, for any scheme, government or otherwise.
Well, I think that's been a lot more clear for me. Haytham, yourself, your thoughts, given you've been at the sharp end implementing this in the last few months?
So let me link the two answers on do we need contactless card, and then what are the wallets and all scheme. So in my mind, you have an evolution between cash, plastic, contactless, tokenized in a phone, and then a wallet. And if you really think about it, plastic will die before cash, because cash will be persisting. We've been doing this for a lot of years. People will definitely don't want to carry another instrument in their hand with the phone and do for this is for payment, this is for this. So it will dissolve into tokenized in a phone or a wallet, because it's like now you rarely get your friends carrying a camera around because they have a phone. But a couple of years back, we would carry a camera. Unless you're a professional photographer, you carry a camera now. Other than this, you have many megapixels in your phone, you don't do that. So people will not carry plastic, will either go to wallet or go to contactless tokenized thing. And if you take this a step further, so how a wallet would succeed, and all of these wallets coming around the world, and what is really stopping wallets from being there is interoperability. Yes. Interoperability is a big issue, because if you have this wallet sponsored by government, this wallet to ride your metro, this wallet issued by a bank federation, this wallet, I have a confession, I don't have a wallet too. So there is.
I have quite a few. I have quite a few.
So I wouldn't buy. I will not buy a wallet for a single purpose. Or I will not buy a wallet for 5 shops discounts. It's too much to carry or too much hassle to carry. I'll forget money on it. So having said that, if you do interoperability of wallets, and this is you see in Singapore now. Singapore, the January Payment Act they have, interoperability is a big thing in this.
Fast.
Yes. So they said, we need all this wallet to be interoperable. And the minute it's interoperable, you get a wallet that you like, and then you start using around. Because wallets also have power when they have a purpose that is a must-have, saying that I have a wallet because I need to ride the metro. So I cannot ride the metro with any wallet, I have to buy this. And this wallet will have a power to add more services to it, and then you can interoperable with other areas. So this is one thing in the whole scheme of things. So if you look at now government issues, this is a very interesting step on the right direction, where we start to see local schemes like this. Government services are being built into this. It's very interesting to us. But my view actually is that, again, if we really want to look at future of payments, do we have people waking up in the morning saying, I want to pay? No, it's not a primary need. They want to say, I want to buy a car. I want to get this. And that's why where we see direct debit coming into the picture big time. If anything will disrupt this eventually, I think direct debit will have a big part of it.
Analysts now see fraud today almost being a $200 billion issue globally. In fact, if we look at CNP, credit card not present fraud in the region or even outside the region, the numbers that the card providers share with us tends to be around almost $25 billion a year is being written off to credit card not present in most cases. How do you see air gaps today in the infrastructure, Samir, for how security challenges could be addressed more effectively by us in the region?
Absolutely. So let's first focus on what are the risks that are probably to happen or are exposed to the market today, right? Security risk, cybersecurity risk is one, e-commerce risk because of the evolution of payments is another one, and the third one is the social engineering, right? In 2013, Bank Muscat, for example, was intercepted by copying data from their systems, and these card data that was taken from the systems were used for a value, and the bank lost a value of around $39 million because of that. In 2018, Cosmos Bank in India lost around $17 million on the back of someone deploying a malware and redirecting transactions from that malware to a different switch from the bank switch and authorizing these transactions elsewhere. So technology is evolving. As late as June this year, in 2020, here in the UAE, the social engineering, there was a case where Dubai police arrested a 12-member gang that was actually socially engineering data about customers, and they were preparing for fraud with a value of around $500 million. All of this are actually driven because of two things. The opportunity is becoming bigger, and as the evolution of digital payments and what have you, it will expose us to much more fraud. I'll give you some stats for your benefit. 46% of the banks and financial institutions across the Middle East region are attacked by fraud. Globally, it's 47%. 25% of the attempts of fraud are really lost by the banks. Okay? So there is definitely a gap in the ecosystem, and this gap is, if I want to summarize them, I think cybersecurity preventive measures are quite critical in terms of fraud monitoring tools and other hardware capabilities that would enable the system. Controls and cybersecurity controls as well, and processes needs to be evolved. 3D Secure on the e-commerce side of the business is another area that continues to evolve. And finally, and most importantly, utilizing artificial data and artificial intelligence in predicting fraud and managing those. But this is a key area that is continuing to evolve and will continue to evolve. As you are aware, fraudsters, once it becomes hardened in an area, so when it's advanced in Europe, so when banks apply all the measures and controls in Europe, they migrate here to the UAE. And if we apply all the measures here, they migrate elsewhere. So basically, a continuous education is also quite critical in that space to make sure that awareness from both a consumer and a customer experience and from a financial institutions, from the financial institution side is quite critical. Remember, we're talking about wallets, we're talking about digital application, what have you. Today, the access and the convenience the banks are giving to the customer leads to a possibility of phishing, right? So when you log online, when you log through an app, there is a possibility of phishing here. Recently, and with the advancement of the technology, recently people started redirecting bank SMSs to different mobile numbers to have access to the bank account. So fraudsters are really smart, and they will continue to invest and evolve accordingly. I want also to cover an area which is very important, what efforts the regulators here are doing as well in terms of fraud and security. I think the central bank here have mandated certain measures and controls and application of cyber security mandates, minimum requirement that enables the banks actually to be protected. The second thing is an area which is quite critical, the controls and the measures, and they mandate PCI DSS as a general standard on that area. But it is quite a hot space and an area that is quite critical to be invested in due to one fact. Everyone here in the region wants growth. Everyone wants conversion of more volumes. The brakes that controls this fast growth will be the investment in cybersecurity and fraud controls.
My last question is focused on disruption. But I'd like to start first with a quote from the science fiction author Arthur C. Clarke, where he wrote in The Hazards of Prophecy, his third law, which is all about how any sufficiently advanced technology is indistinguishable from magic. And as technology increasingly, or big tech as it's popularly known now, is causing disruption to so many journeys, to payments particularly, it becomes one for us to reflect on at what disruption are we going to see in the months ahead and years ahead around this particular paradigm. And then you've got recently also Google announcing how they are partnering with almost 6 more partners in America to start offering digital banking services in the States. So Arjun, if I can turn to you on this last question regarding disruption. We've all seen how globally transaction volumes are down. Banks are having to make lots of bad debt provisions. There's a lot of good work happening around the interoperability of different national schemes that are being launched, as they also look at standards like ISO 20022 and its global implementation. We ourselves in MENA are beginning to also look at the dawn of open banking as yet another opportunity for us. So what do you see, Arjun, as factors that could potentially bring in more disruption for payments in the region?
So there's so much going on, right? So there's technology of all sorts, whether it's 5G, AI, blockchain, that's kind of a whole theme going on. There is regulation, my favorite one, which is in the short term, I think the regulator can do something with interchange. I think it takes away the addiction to interchange, which means people will innovate faster. I think you mentioned about supply chain and embedding finance into it. And the list goes on, right? My sort of favorite, I guess, hobby horse these days, and just because I spend a lot of time reading up on it, is the concept of open banking, and I think the concept of open finance, right? If you take it to this, I think fundamentally, this pandemic has shown the importance of being digital first, right? We went through a period in this part of the world where it was impossible to get a loan or to get a credit card or any instrument because people needed wet signatures, right? And that's kind of what sort of brings, the story to home. So you can sort of paralyze your business if you haven't thought through the implications. I think what COVID-19 has done is basically accelerated the regulator's point of view on open banking. I think it's too early to say what actually that
for
will
those
be.
of us who probably don't know enough about it, what is open banking?
Okay.
Briefly, very briefly.
So the open banking is basically, in simple terms, giving the consumer and the SMEs the ability to use their financial data in a manner that they can access new services, which doesn't necessarily need their bank provider.
So the citizen gives permission for his data to be monetized.
Well, that's one great way of putting it. Yes, yeah, and there is it is a global movement, but it is actually there are a number of different avatars, if I might say. Europe and UK have gone down what I suggest, or I use, a very prescriptive route, right? The US, being the US, has gone down a market-driven route, and obviously Asia is doing their own version, and I don't put China into it because China is unique in its own sense, right? But I think there are some very key learnings emerging out of it, right? As I said, we do not know where this all will land up. I think we will see open banking in some form or shape coming in here. And I think banks will have to learn how to work with the fintechs better. And it's about collaboration. And I think, yes, there is fear of disintermediation and all that sort of stuff. But I think it's a fear which they need to take with a positive attitude rather than pushing the eventuality. But if I kind of list 3 or 4 sort of key learnings which are emerging out of the market, and I actually listed them because I've got like so many thoughts, so I thought I'll summarize them. So I think the first thing is very important. Most consumers globally don't actually know that they actually own their financial data, right? They've always believed that actually the bank owns their financial data. And I think if open banking has to grow in this part of the world, the first thing I think the regulator needs to do is empower the customer, right? So one is that, right? Second, and I'm not going to talk about trust and security anymore. I think you've done a great job already. I think it's critical that customers feel that they can trustfully give consent that their data is used for their monetization and not for someone to actually sell it to 6 other people, right? And that abuse, and we've seen some of that abuse which exists in parts of the world, right? The number 3 one is there is no one playbook. So we don't have to go and pick and choose what Europe has done and force that down countries' throats. I think each country should approach it in a manner that works best for them. But as long as we can standardize certain frameworks so that things can be done in an interoperable manner, I mean interoperable at a level of abstraction which is different, I think is very good. I don't think we should standardize technology and governance standards. I think the market should come together and build the infrastructure out. I think this is where the fintechs will really, really drive the change. Otherwise, you fall prey to, one system governs everything. And the final point I'll make is, let's start with use cases, right? Rather than build up. So I don't think the whole attitude is, build and they will come. I think it needs to be driven from a consumer perspective. So I think that's one form of disruption.
Arjun, thanks. That's certainly opened up lots of opportunities for where retail as an experience is going to change for many consumers with open banking. As it becomes quite obvious that choice will be something that customer intimacy will drive more and more for us as open banking becomes adopted around the region. But I want to turn to you, Haytham, on this point too. What are your thoughts on this?
I think in open banking there are two things. One, giving access to the data for them to study it and offer maybe financing that a bank wouldn't have the courage to offer. It's actually a nice thing to have because it will help recovery. But actually the issue with open banking, I think, is the UX, which sounds simple, but it is the issue. When Facebook designed the UX for banking, or when Amazon now going to design the UX for banking, or Google, they will really get it differently. They will get the same experience you get it when you're buying from Amazon or you're browsing your Facebook. But the bank think of, you want to go payment, go to the hamburger menu, press here and then make a payment. They think differently. And what happened is this generation will start to feel, why am I going to this online banking where I can have a Facebook-like experience, where it's more social, or an Amazon-like experience, where it's more like buying rather than using a bank platform. And this was a threat that's coming in GPRS or PSD2 when it happened in Europe. Yeah, lending will disappear, but actually customer will enjoy a UX that they will go out of bank because of. And this is where it happened. And back to the innovation disruption, let us not forget that nobody wake up in the morning and say, I want to pay. People wake up in the morning and say, I want to buy grocery. The fact that I need to pay for my grocery is because I want to buy grocery, but actually I don't want to pay. And that's why, for example, you see Dubai now. Dubai now, I have all my D1, my Etisalat, everything on it. And every month, they just debit everything for me, do everything, and then I don't need even to think of the notion of payment. So if you think about disruption, the end of the story will be the notion of payment will disappear. People will not need payment. People need payment to happen, like Amazon store now that you go and pick up the goods from the shelf and you don't need to pay it, automatically check you in and debit you. This notion of paying, whether touchless or card or whatever, is going to disappear at the end of the story, and it become a commodity that do itself by itself while I'm conducting my real life.
Thank you, Haytham, for your insights. English is a funny language. There are many words that we could select from the various insights that you've shared tonight that represent how payments will continue to be disruptive for the entire industry. Experience, and back to the point you made about UX, will continue to be relevant, as will open banking, Arjun, to the point you made earlier. But also personalization of how we receive and understand messages and how messages show they understand us will continue to be relevant in the adoption of payments going forward. It's clear from our insights that the payments battleground for the future will continue to stay focused on being interoperable, on being secure and real-time and fast. And all of this is going to continue to involve many creative minds in the regulators' discussions and technology discussions that are happening on how biometrics will play an even closer role in being involved in the integration of those payments, becoming more real for all of us. Hence, to conclude, the rise of digital payments will continue in an increasingly contactless world. To wrap up, first, can I thank you, Haytham, Javed, Sameer and Arjun. Thank you very much for your time, for being great guests tonight. I've certainly learned a lot from the discussion and from the insights that you've kindly shared with us. Thank you also to all of you for following the discussion tonight. Next month, we'll be here again discussing how do you build a greenfield digital bank in 2020. Until next time, thank you Capital Club again for hosting us tonight. And from all of us at Technology Heroes Unplugged, see you next time.